come into this property where I'm going to show you how I just gave away $75,000 and why I'm happy about it. So first off, what is a joint venture in the first place? Well, typically in property, it's when one person brings the money and another person brings the deal, puts in the effort. Now, it can be a multitude of that. It could be one person brings the money, one person finds the deal, and one person refurbishes the deal. It could be a joint venture where you've got the property and the money, and the builder joint ventures with you at a lower cost. But we'll go back to the most typical one and what this one is in particular, where one party, me, brings the money to the table and the other party, Jackie and Steve, partners in crime, puts in the time, effort and the development, and we split the money 50-50. So it's an alternative to somebody loaning the money. Now there's pros and cons of that. One of the biggest pros is there's not increased risk for the party over here, Jackie and Steve. The reason there's not increased risk is if the property sale doesn't go through for what we think it will go through for, and we end up selling it for 50 grand less, well, there's no impact on them apart from they make lower profits. And eventually, let's say it went all the way down and we lost 50 grand, they don't lose money, I lose money as the investment partner. Whereas if I'd put the same amount of money in on a loan basis, then I would be protected to a certain level, because no matter what happens to the project, they would still owe me money. So a massive reduction in risk for them. But the benefit for me as the investor is I take part in the upside of this property. So I'm going to be very strategic on the properties that I invest in on a joint venture basis. Because of my increased risk, I want increased reward. So let's jump into the numbers. So the purchase price of this property, it wasn't a 4-bed detached. It was a 2-bed bungalow. It cost $230,000, no stamp duty, had about £2,000 worth of buying fees, and the refurbishment was $140,000. And then there's going to be some sales costs, but obviously that comes off the end. There's some cost of finance in there because we took some debt into the property to leverage it, and that's going to come to about 30 grand. But in total, what I personally put in was £209,340, and that was broken into two parts. So 100 grand-ish was to help towards the purchase of the property, and then the 109,340 has ended up being for the development cost. So a bit of planning cost to actually get the planning to go up here, create the 4-bed detached, and that totaled 109,340. And in the end, by the time we sold it, hopefully at 595, but it's not sold yet, we're going to get 8,500 worth of sales costs, and then the profit at the end is going to be 148,418 pounds, which is 74,414 pounds each. So 75 grand, give or take, on a £209,000 investment. So we're looking at about a 34% return on investment in around 12 months, which, yes, it's high risk in terms of it's a high-end flip project, if you think about it, high-end development project, but I'd say that's a solid return. So what is it I look for in a joint venture and a joint venture partner? Well, first of all, clarity on the exit of the property and clarity on the numbers. The amount of times people come to me and go, hey, do you want to invest in this? And they send me a bloody Rightmove link. And it's like, no, you need clarity on everything that's going through. If they're looking for 50-50 joint ventures, then I need to know that they've got past evidence, past experience doing properties. That's not to say I wouldn't joint venture with somebody that's new, but maybe I wouldn't consider a complex project if it's their first one. And honestly, from a character perspective, I want to make sure that they're actually decent people. And I always think, you know, would I go for a drink with this person? Would I enjoy their time? Because it's when things that go wrong, are they going to be open in communication? Are they going to be communicative, honest people and have that integrity? And that's exactly what I found in this joint venture with Jackie and Steve. And by the way, quick snippet on that. I met Jackie and Steve in 2019. They've got a background in finance and as a florist as well, owned a little florist in Yorkshire, and met them in 2019. They actually became part of my first ever educational academy in 2020. And the reason why I'm talking about that right now is we have fully redone, rebuilt, re-immersed the Elite Property Trading Academy. And if you want to become one of my partners, people always ask me, hey, can I joint venture with you? Can you fund my projects? And the answer is no. As you can imagine from the channel, loads of you get in touch with things like that, and I only ever invest in my own projects or mentees projects. So if you want the chance of that and you want to get educated directly, put education in the comments, or I'll put a link in the comments and pin it to the top. Click on there, fill in your details, and what we'll do is book in a completely free one-to-one strategy session where we can find out a bit about where you're at, where you want to get to, and if we can even help. So put education in the comments now or click the link, and let's jump in and meet Jackie and Steve. So we've got Jackie and Steve here with us today. Thanks for coming on, guys.
No problem.
I really want to sort of get some info from you, if you like, that can add value to every subscriber watching right now. So let's just start with Steve. You found the opportunity. What was it that you saw? Because I think we walk down the street, we look online, and people would walk past this and not see anything. So just a bit of background, what you saw, what opportunities could you see?
Well, we actually saw the bungalow, and it was a pretty crappy bungalow in a really nice area. We saw that in 2018, way back then, and we thought about buying it then, but we were too slow. We didn't do anything with it, and it got sold to somebody else. We then saw it come back to market about 18 months ago, and it was on market on Rightmove, and it was being advertised with planning permission to develop 3 new build properties on the site. And we immediately thought, this is just completely overdeveloping the site. It absolutely does not need that. It needs the bungalow converting with a first floor extension into a house, because that was much more in character with the village, and it was just probably actually going to work out just as profitable to do that as it would be to kind of overdevelop the site, in our opinion. So, you know, we were looking for something, and that's what we found really, and it was just the planning permission was wrong for the site. And that was the first real sort of clue that we could do something with it. And then just looking around the area, you know, we could see how a really nice 4-bed detached property would sit in the environment it was in. The views are spectacular, as you've probably seen.
They're incredible.
Amazing, aren't they? So, yeah.
So you found this one online.
Yeah.
Right place, right time. Speed was really important. My question is, like, so it was a developer that owned it. What happened there? Because why is it you chose to develop it through, even though a developer was selling it?
Yeah, well, as I say, I think the plan was wrong. And I think the guy who had actually owned it prior to us, he'd been through a lot of challenges to get the planning that he wanted to do on it, and he wanted to build 3 houses. In the end, he got planning permission by appealing to the Secretary of State, and he actually got planning permission for 2 properties, which would be right on the road front, and again, still overdeveloping the site. So he was persona non grata, or what the expression is in the village. He was hated in the village, properly hated.
Are you hated now, or do they like you?
No, well, we came in, and the first thing we did was we made friends with the neighbours, and we said, hey, don't relax, we're not doing that scheme. We're going back to the planning, and we're going to go for a different scheme, much more sympathetic to the environment. And we were like hailed as, you know, saints. To be honest, they were like brilliant, fantastic. We're so pleased that's not happening. Nice. So yeah, it was like
amazing. So I know obviously this is a joint venture. I'm your funding partner in this. So like Jackie, from your point of view, like why did you even open up to joint ventures to accelerate your journey in the first place?
I think when you're looking at a project this size, then to fund it, we tend not to fund through traditional methods anyway. We always work with angel investors or JV partners. And I would say most of the flips we've done have been JV partners, because it's a very, very clean exit. And it just means that it's an easier kind of journey for us, in as much as we've got a funding partner, and then we act as the managing partners. So the funding partner knows that they're going to get a better return than if they angeled the money. So, as you know, we're going to get more out of it than had it been a fixed return. And then we manage the project. So it's, for the JV partner, a much easier situation, in that they're not really involved in the project unless they want to be. We update with pictures and progress reports, etc. So they're kind of involved. Always open to come and see it if and when they want to, but it's not somebody breathing down your neck all the time. So it gives us more free rein to do the project way we want, and it allows us to do bigger projects that maybe we might struggle on funding in other ways.
Nice, I love that. So if somebody's watching and they're, joint venture, the idea of finding people with money is great. Like, if you had like 2 or 3 tips, like how would you find them?
With any kind of raising finance, I would say talk to everyone. It is literally, if people don't know what you're doing, how do they know if they want to work with you? So you just tell everybody what you're doing. So it was probably easier with you because we were working with you anyway. But like the JV we did last time, we were just literally, we happened to be talking to somebody in a room and saying, fantastic, we've just had an offer accepted. All we need to do is find the money. And they went, well, actually, I'm not going to help you there. Would never ever have happened had we not said.
Did you even know that person had the money ready to go, or was it just pure coincidence?
Yeah, it was just somebody doing training with us. And they just happened to say, oh, well, I can help you there.
Jamie, it's been 7 months on this project. How did you find it?
Incredibly easy. I have to say, I've joint ventured with a lot of people, loaned probably about 8 million now out to individuals. This has been one of the easiest projects for me, and it's because I mentioned earlier about like know, like and trust the individuals, and so from an experience point of view, you've got it, and so I could trust in that. I know it's the biggest project that you've done today. You analysed the numbers properly, and I ran the numbers myself, and I was like, it looks solid. And the fact that, for me, I always say, like, would I ever go for a beer with them? And it's like, yeah, because I don't like investing with people where I mean, we're going for a meal after this, right? Yeah. And the fact is, all of those things, like the bat service, stuff like that, I don't even know about. Like, you might have even sent me a report on it, but it's like, for me, you just crack on. The problem comes up, you find a solution. So from an investment partner point of view, it's really enjoyable because it's just like, I've got the money there and I want to focus on making more money. Yeah. And, for me, it's just like, cool. So if you come to me and go, Jamie, we need $500,000. It's like, yeah, fine, have $500,000, go do it. Which is good news for you. Yeah. And on that note, here's a proposal. Yeah, sign here, sign here. No, but for me, it's a perfect joint venture because, the whole idea is I can make money and money. I know the risks involved. I analyse the properties as much as you do. And it's just like, so yeah, crack on. It's all good for me.
That's great to hear. Thank you.
So is it what you expected? Now it's all done? Do you like it?
I love it. I think it is really great, really decent quality as well. And like, because it's not a normal project that I get involved in, because for me, I'm a big believer in your active being active, your passive being passive. So my active income stream is deal packaging and, and a couple of developments here and there, maybe some commercial conversions. That's it, simple. And it's like, and I'm good at it and I make good money from it. And then my passive is boring, vanilla, buy-to-let properties and loans. And so like when I can loan out money or joint venture, it's really cool because it gives me that excitement piece with a project like this. It's not an area, it's a beautiful area. It's not your typical buy-to-let area. It's not a terrace property or a semi-detached. And as I said, I think you guys have done brilliant, and it's the fun part of property where you've got that emotional experience when you walk in, you're like, wow, this is a home for somebody, and that's pretty cool. So yeah, I love that.
Good.
So kind of a unique video today. Hopefully you've got massive value, and the way that we measure the value is how many subscribers did we get. So if you're new to the channel, make sure to hit the subscribe and the notification bell, and hell, if you like Jackie and Steve, hit me with a like or a dislike in the comments and I'll let them know. Make sure to hit the like and the subscribe button, guys, and I'll see you in the next video.